No, we're not playing the red solo cup beer drinking game. We are playing the tax planning game. So when you are saving for retirement, you need to pay attention to tax planning. It's really, really important. And so many people don't understand it, let alone financial advisors. Those guys that help you accumulate your assets, yeah, they're not really thinking down the road. In retirement, they just want to help you invest now so they can pocket some money off of your investments. But tax planning is so very important, and so many advisors don't know a hoot nanny about tax planning. So it's really, really important as you are saving and investing for retirement that you understand tax planning. But then as you're preparing for retirement, and those last 5 to 10 years before retirement, you also have to think about taxes, because that is an expense in retirement. And there's several ways to pay less taxes, but most people need some help. Let me talk about this tax planning concept so that you can understand. I figured I would have these 4 red solo cups. They're all labeled. 1 is tax me now, 2 is tax me later, 3 is tax me never, and 4 is triple tax free. So there's 4 tax buckets. A lot of people are familiar with the first 3, but they're not familiar with the 4th one. Very, very important as you are saving and investing for retirement that you don't put all of your eggs or your dollars in one bucket. Just like you want to diversify your investments, you want to diversify your taxes. You want to diversify between the tax me now versus tax me later versus tax me never versus triple tax. So let's talk about each one of these. So in this red solo cup, tax me now, those are things like CDs, money markets, investments like stock trades, those types of things. Those are things that get taxed now. Then the tax me later, those are your deferred accounts, such as 401ks, IRAs. On the back end, you're going to be taxed. So that's why it's called tax me later, because once you open a 401k, you are in a relationship with the government where down the other end, they're going to want their tax money. This is the tax me never cup. And basically in this cup, you have your Roth 401ks, your Roth IRAs, your municipal bonds, and things like life insurance, like an index universal life plan. That kind of policy is great because you don't have to pay taxes on the proceeds from that. And then the 4th cup is triple tax free. There's one type of investment account that is triple tax free, and that's called a health savings account. And yes, it is for healthcare expenses, ideally in retirement. The money goes in tax-free, it grows tax-free, and it comes out tax-free. So that's why it's triple tax-free. So the idea is that you are going to diversify your savings and investments into these 4 buckets, just like you would diversify an investment portfolio. So depending upon your goals and what you're trying to achieve will determine how you want to spread your money around in between these different accounts. So we're going to put a couple bucks in each bucket, and then we're going to maybe put a little bit more in this bucket. Obviously, there are limits on some of these accounts. HSAs have limits, Roth IRAs have limits, so on and so forth. The government's only going to allow you to do so much, and I have some documentation on those limits. You can check out my 2024 cheat sheet because I do have retirement savings contribution limits in that cheat sheet that you can check out at the links in my bio. But anyway, I think you're kind of visually getting the concept of tax diversification into these 4 types of buckets. So one of the things you can do as you get closer to retirement is you can move money around in the buckets. So for instance, you can take the tax me later money. So you could take $1 out of this account via what's called a Roth conversion, and you could convert it to a Roth and put it in the tax me never bucket. So that's a subject of another video, but it is one of the strategies to consider. Now, one of the other things that you need to do as part of tax planning once you get closer to retirement is, how are you going to take this money out? What is the best order to start pulling money out of these buckets so that you pay as little taxes as possible and your Social Security income isn't impacted, nor is things like IRMA premiums, which is the income-related monthly adjustment amount. It's a Medicare premium that you pay over a certain income amount in retirement. So all of these things have to be integrated along with your investment strategy, your income strategy, and your tax planning strategy. And if you don't have an advisor who is tax knowledgeable, it's so important, especially the more assets and income that you plan to have in retirement, because the more you have, potentially the more you are taxed. And you want to be as efficient as possible. Like, why pay more taxes than you have to? If you can pay a tax expert, a retirement tax expert, a small amount of money to save you a large amount of money, that's a no-brainer in my book. So if you need some help with tax planning, or you would like some guidance on tax planning, reach out to us. We can help you get her done. Here's to being tax smart, putting more money in your pocket and not in the other bucket, which is the government's bucket. All right, let's get her done.